on your screen. Tomorrow you got the July IIP numbers coming in. Let's just go back. Let's just go back to Wednesday, and if you can put this up on the wall, it'll kind of make things clearer. The IIP numbers tomorrow, first in line in terms of data to watch. So 0.5% growth is what is expected as far as the consensus expectations go. In the month of June, that number was down about 1.8%. I mean, industrial activity has been pretty slack. If you take the first quarter average IIP growth, that actually stands at almost nil. I mean, almost zero. So, activity has been low. You got the core sector data that shows that things aren't expected to come up anytime soon. So that's the first number. That's tomorrow. Tomorrow you've got, and this will basically be after market hours here in India, the German Constitutional Court which is going to rule on the ESM. That's the European Stability Mechanism. It's basically going to decide whether these things like the ESM, the EFSF are legal or not. So it's a question of legality. The reason it's important is, although very few, a very small minority expects that the court will say anything other than saying, well, it's all okay. So very few expect the court to say that these things are not legal, they don't fall, and the Constitution of Germany doesn't allow for it. If it does, if the court goes that way, takes that line, then that's a clear negative to the entire process that creditor countries have been trying to evolve. The OMT, for example, the outright market purchases program, which the ECB unveiled last week, it's a negative to that. It's a big negative to the euro as well. So I think this is expected around 4-ish India time. We'll keep an eye. On Thursday, you've got the inflation numbers, which is going to be important. The August wholesale price index is seen at 7.05%. This is, of course, year-on-year growth numbers that I'm talking about. Again, consensus expectations. For the month of July, that number was 6.87%. Out of the IIP and the inflation number, the bigger thing from a market standpoint would be inflation. To no lesser degree, because you got the RBI meeting also coming up, and I'm going to come to that in a bit. On Monday, the next coming Monday, you've got RBI lined up. On Friday, of course, let's just go back. So on Friday, you've got the Fed decision which will come into play. So by the time we come back Friday morning, overnight, the US Fed would have announced rate decision. And of course, the chatter around another round of quantitative easing, all sorts of numbers are being spoken about. That is also going to be keenly watched. This meeting, you'll have Mr. Bernanke laying out his economic financial forecasts, so that news conference also would be keenly watched. For us, that's Friday morning. And of course, coming Monday, the next Monday, we've got the RBI rate decision. Again, if you look at news wires and their consensus expectations, the consensus doesn't expect any rate changes, not to repo, not to reverse repo, not to CRR. That's the lineup in terms of what's coming up over the next few days, starting tomorrow with IIP. Let me get in Dr. Surjit Bhalla, who's joining us on the show after a really long time. Dr. Bhalla, thanks very much for your time. Great to have you with us here.
Yeah, my pleasure.
How are we looking, Dr. Bhalla? A lot of things to watch. What's your sense?
I think the most important thing to look at is what happens domestically and what happens with diesel prices and LPG prices. We've talked about that a lot over the last several months. It seems like forever we've been talking about the need for a diesel price hike. And I hope it is imminent. We've been disappointed before. You've taken the horse to the water, but the horse has refused to drink. This time I hope everything falls into place and we finally begin the process of getting our deficit right and getting our macroeconomy right.
So you're saying local stuff more important than what's happening globally? That's your call?
Yes. Globally obviously is important, but I think of paramount importance is the local stuff. Okay. If the German Constitutional Court, for example, if the German Constitutional Court rules against it, there will be a dampener in world stock market activity, world investment activity. But if we do what we're supposed to have been doing for a long time, that will cushion the impact. And after all, I mean, a lot of our growth is basically domestic, not international. So therefore, I think it's not, it is the domestic situation that is paramount.
Okay. You know, I agree with that. From a medium-term point of view, that might be more important. But slightly near-term, next month, 2 months or so, Dr. Bhalla, I would argue otherwise. Take a look at Friday's session. The market, the Nifty was up 100 points, 110 points actually. The oil minister came out and said that we're not going to do any fuel price changes over the weekend. There was a huge expectation that something will happen on Saturday. Over the weekend, you would get fuel price changes because Parliament session ended, right? The market didn't budge. Oil marketing stocks came off a little bit. I mean, I know it's a one-off kind of an example that I'm pointing to in one day, but the point is, you know, liquidity is extremely strong. So irrespective of, and the threshold of disappointment locally is quite high now. So if you get IIP numbers, you know, deep negative, I don't think people are going to, you know, the threshold has risen for all kinds of disappointment, Dr. Bhalla, locally.
Look, let's look at the determinants, okay? We are back to the famous liquidity driving stock price and liquidity not being there, not driving stock prices. And we've discussed that enough. You know my camp. I believe the liquidity is the most overrated determinant of both stock prices and economic activity. So, but let's just deal with economic activity. What ails the Indian economy? What ails the Indian economy is, one, high inflation, and second, if you will, a very irresponsible fiscal situation. Those are your two major factors affecting the Indian economy. Now, if we were to improve on those and the world situation, world liquidity was up, down, intermediate, will be better than we are today. So my simple point, and that is obviously going to have a much greater impact on Indian growth and therefore Indian profits. The profits provided by liquidity are very, very short-lived. I mean, how much more liquidity can the West provide that will make a difference to Indian economies? It may make a difference to German economies, or more importantly to Spain and Italy, where the interest rate is 7% and the interest rate will come down to 5%. That's a huge kick. Think about the same kick that the Indian industry will get if interest rates in India were to come down. And interest rates in India will come down provided we start moving the fiscal space into a neutral territory rather than, and in your terms, an overbought territory. So therefore, if we start correcting the fiscal space, the RBI will be expected to act, and it'll be a huge disappointment, and if you will, huge questions will be raised if the RBI then doesn't act. So therefore, it's a win-win situation for the government, but most importantly for the Indian economy if we start getting our fiscal space in order. And that is going to really determine, in my view, I could be wrong, in my view, the duration, the direction of stock prices and industrial activity and GDP growth in India.
You know, given the new realities, the new FM, what do you think? What's the comfort level of the RBI, according to you, to cut rates? Yes.
Yeah. No, first, actually, this sheds light. I mean, the interview with Jayapal Reddy, I mean, he's now crossed the Lakshman Rekha. This is the very first time I've heard him say that, listen, the oil price is either today or a week from today or somewhere in between. So he's now crossed all Lakshman Rekhas in terms of whether he is for or against or whether he thinks it's necessary or not. So according to him, it is imminent. It could be as early as today. And this is the very first time I've heard any public policy official saying it could be today. So he's not ruling it out. He's not ruling it in, but most importantly, he's not ruling it out. And I think this has a definite bearing on what the RBI will do or is likely to do on the 17th. Because if they move on the diesel price and the other associated prices, and remember he said even petrol, so obviously diesel, obviously LPG, and then he said added even petrol. So I think that's about as strong a message as you can get from the oil minister, and we know that the finance minister is very much in favor of, if you will, a realignment of diesel prices. His own committee has recommended that they do so. So I think all the stars and, if you will, all the forces within this line towards increasing. Now, they worry about Mamata Banerjee and a few other such details, but it seems that it'd be very unusual for somebody to bet against an oil price, diesel price hike happening over the next week or so, which means that, and you know, the RBI meeting is a week from now, almost just one day, less than a week from now, and it means that the center will act, in my view, before the RBI meeting, in order that the RBI can absorb this new information and act accordingly.
Right. Okay, got that. So RBI then will surprise. If they do decide to act, then it will surprise, because expect consensus expects no rate changes, not repo, reverse repo, or CRR. So if they do decide to do something, yeah, go on.
Yeah, Prashant, the expectation about the RBI not doing anything is with the null expectation that the government won't do anything, which has been a very safe expectation until now, that they won't do anything on the fiscal side. So I think over the next few days, expectations of what the RBI are likely to do will change and will be based on the expectations of what the government is likely to do on the diesel price front.
All right, got that. I want your thoughts on just the Fed FOMC and what it might or might not do, Dr. Bhalla. What is your sense on what will happen there and the impact on markets like India? QE3, yes.
I think what's happening in Europe is a lot more important than what the Fed does or doesn't do. The job numbers in the US did come out to be much weaker than one had thought, and this does mean that the slowness in the recovery is being prolonged. The Fed doesn't have that many options open, whereas the European. So I don't think that what the Fed does is really that important for us. If they do nothing, it'd probably be good for the Indian market. If they don't do anything, it'd probably be good for the Indian market. So it's not, I don't think it's that important anymore. And actually, even for the rest of the world, the critical area was Europe, and they have acted. And as we discussed earlier, the German Constitutional Court meets tomorrow in order to decide whether to go along with what the Mr. Draghi has recommended or what the ECB has recommended. I think that's so. If the ECB doesn't go along, if the Constitutional Court doesn't go along, that's a big shock, and that automatically will increase the effectiveness or the worthiness of what the Fed does. But given expectations, which is an oil price hike in India and possibly a rate cut in India, and the German Constitutional Court approval of what the ECB is doing, I think the world economy is set on a slightly upward path from being in the doldrums for the better part of the last 6 months.
And who knows, markets might have a good one the next week. So looks like a couple of things are coming together. Let's hope so. Dr. Bhalla, thanks very much for your time. Great to have you with us here.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.